Monetary is basically just think of interest rates, although there is quantitative easing, but don't worry about it. It's not going on at the moment. Monetary is interest rates through the Federal Reserve, okay, which is independent of government anyway, or tax, fiscal policy, i.e. you can spend or you can tax. Tax less, tax more, so you've got more money in your pockets. And there are only three components to the economy. There's the consumer, there's the investor, i.e. companies, and there's government, okay? So of those, I mean, it's a bit more complicated than that, but essentially there's only three elements, okay? And of those three elements, if they've got more money, then the economy does well, right? It's as simple as that, obviously. But we work on expectations. We think chess moves, what's going to happen next and what's going to happen after that. Well, at the moment, the beautiful thing about what Donald Trump's done, either by design, either the man's an absolute freaking genius in economics, or he's accidentally stumbled onto something through gut feel, which I think is more like that. Because by increasing tariffs, he's up taxes, but by reducing fiscal tightening, i.e. by spending more, he's countered that, he's balanced it out. And by pushing for lower interest rates, he's also cancelled it out. So he's been able to tariff the hell out of people and claim it's a big stick without causing economic damage. It's beautiful. It's Goldilocks. Okay. It's not too hot, not too cold, the economy. And it looks like, according to Morgan Stanley and others, not just me, the fourth year is going to continue rising. Okay. Now, in the noise you're going to hear about is going to be about AI. You're going to hear a lot of noise that, oh, AI spending too much. How can they ever get those returns? Well, actually, when you look at the valuations of something like NVIDIA, you're paying about $30 for every future dollar of profits. That's pretty similar to what you've always historically paid for tech companies. In fact, it's cheaper than you've historically paid for them. And it's nowhere near how much you're paying for Tesla. So it's like renting a property and somebody saying, well, it produces a rent of $1 a year and you say I'll pay $30 for it. Is it too much? Is it too little? Well, depends what everything else in the neighborhood's going for. If it's going for $20 everywhere else, you've paid too much. If it's going for $50 everywhere else, hey, guess what? You've got a bargain and you could flip it and sell it at 50, for instance. That's what valuation is. And the beauty at the moment of what's going on is when you look at the data, as opposed to the narrative and the panicking journalists, who I'll show you in a second, we're doing all right on that side of things as well. Okay. So the AI productivity thing, long term, a bit like electricity and light bulbs, we know we're fine. Short term, you're going to get noise. That noise is there to cause you panic and stop you making money. People like me are not going to get panicked. We're not going to get bored because we've got the experience. So we're going to get wealthier out of the very same place that you have access to, the market.